The S&P traded higher on the day, opening below 5,900, but trading up through the 5,900 level to close at 5935.94, up 0.41% on the day. We were discussing in our live stream earlier this morning, which, by the way, you can join us in our live stream. There's a link to join directly through YouTube. I'll put that in the description below. Check that out when you get a chance. But we were discussing how we have been trading in this range between 59.50 and the 58.50 range for the last 2 to 3 weeks. It's been really a grind, just consolidating around this 5,900 level. Big volume at 5,900 almost every single trading session, and we've just been oscillating around that 5,900 strike for days and days now. When we look at the gamma exposure concentrations above, however, we still see large GEX concentrated at both the 6,000 strike and the 6,100 strike is now really starting to grow, especially after today's trading session. I thought that was a notable improvement in the GEX data, and it does look like we are about to break out of this near-term resistance point, and the gamma exposure is starting to grow at these higher strikes. And in fact, if we zoom out here to our daily candlestick chart and we actually zoom out up the options chain, the purple bars here represent absolute net gamma exposure. And you can see from 6,000 all the way up to even 6,500, we've got large positive gamma exposure growing on a net basis at all of these strikes here. And in addition, when we look at the volume that came in today, we had outlier volume at the 6,000 strike, over 100,000 contracts traded. So we'll see how the action looks tomorrow morning. We're going to be looking for a breakout of this resistance at 59.50. Will we open above this level, and do we have enough momentum to continue through that 6,000 level? Our gamma exposure data updates in real time, and we can also analyze this on a 0 DTE basis. So for example, today we ended up closing right near the 59.35 and 59.40 gamma exposure. That was really growing a lot this afternoon, especially in the last couple of hours, pointing to a potential move into that level. And sure enough, that is where we ultimately closed.
Thanks, Anthony. Yeah, I was really excited today. Of course, in investing or trading, we always have to temper our excitement no matter what the indicator says or the move, as you know. But I was glad to see the first close over the whole moving average since May 19 for SPX. So that's a good sign in my book, because if price is above the whole, I view that as a long signal. If price is below the whole, I view it as a short signal. For SPX, as you mentioned, we have this big 6,000 cluster. That happens to be about 1.5% at a minimum from this point. So that's not that big of a move to reach the lower part of the dealer cluster zone. Now, the box stretches high enough that we could see further incursion into the range from 60.50 maybe to 6,100. So we just don't know. Without rehashing too much of what you already covered, I wanted to take a little bit closer look at DIA. So this is the Dow ETF, and we have the same general setup. We closed above the whole moving average. 422.47 is the whole. We closed at 423.71. Now, I do want to note that a lot of the volume for DIA was below the current price in the options market today. But what I like on the long side for DIA is that this upper dealer cluster zone at 435, which is the largest GEX cluster that we see, it is almost 3% above. That would be about $13 higher. Whereas SPX, we mentioned it has about 1.5% to go. So there is a larger percentage differential here on DIA than we see with SPX.
Thanks, Sean. Next, let's take a look at GLD. Gold has been hot in the last year to year and a half. Volatility has picked up in the gold market over the last few weeks. However, price continues moving higher. We saw a big move up today, up 2.66%, closing at 311.67. And that coming as GLD bouncing off of its 50-day EMA, coming right into this big 310 strike. This is the largest gamma exposure concentration for GLD. We've been watching this level for a couple of months now as we've been oscillating, buying the dip and selling as price gets into this level. Now looking forward, we do see gamma exposure continuing to grow up into these higher strikes all the way up to the 330 strike. So that is something we are eyeing for a potential target in the coming months. One of the ways we have been playing this is a call debit spread in one of our portfolios. We've got currently the June 20th 300-320 call debit spread. We actually just rolled that position this past Friday. So the move today was obviously really good for our overall portfolio. But again, we are looking for a move up into this 320 and maybe even the 330 strike. We do have some overhead resistance here above 315, so it'll be interesting to see if price makes it up to that level. Does it have enough momentum to break through to the upside and to our next target at 320?
Anthony, while the GEX picture on the indices looks like we have a pretty good runway to reach those upper dealer cluster zones finally, I did want to caution that the VIX signals that it might be short-lived. And I say that because we have this negative GEX at 18 and then, at 17 and 16 is sort of the last meaningful GEX cluster that we see on the VIX. So the VIX is implying that downside for volatility is limited from this point based on GEX. Now it is below the whole moving average, so I do think that the VIX is set to reach those lower targets, and that does seem to back the view that the S&P and the Dow and the NASDAQ and IWM, reach their upper dealer cluster zones. But this could happen fairly quickly where we see some sort of gap up or maybe a one-day rally, and we could see the VIX reach this lower target zone and then reverse and head toward the 25 area or even higher based on the GEX clusters we see above. And we do see option volume, once again, a speculative metric, but we do see option volume at these higher strikes today as well. So looking for, potential rally in the indices to the upper dealer cluster zones this week, while the VIX potentially reaches the lower dealer cluster zone, and then we see some sort of a short-term reversal.
Thanks, Sean. Next, let's take a look at Meta. Meta up 3.62% today, closing at 670.90. We've been discussing all this gamma exposure concentrated between 650 and the 700 strike, with the 700 strike being the ultimate target and the largest gamma exposure concentration. Volume in the options market has been strong, particularly at the 650 and the 700 strike. And today we continued seeing volume coming in these ranges. We've actually been trading Meta in our portfolios. We were looking for a pullback into the lower 600s, maybe somewhere down here around 625. We never really got that pullback that we were looking for in the last few days. And so it does look like we may have missed this run. If there's any kind of consolidation around 650, we'll look for another re-entry point before the next move higher. But this target at 700 does look to be where market participants are trading in the options market, a lot of volume coming in, and hence we are seeing the gamma exposure pointing at that 700 strike. In terms of timing, most of that gamma exposure at the 700 strike is in the June 20th expiration. So we'll be looking to see if we can still squeak out a trade that targets that 700 strike.
Thanks, Anthony. Let's take a look at Apple, AAPL, and this is also a Dow holding. Of course, it's in all the major indices, but this would clearly help DIA to reach those higher targets. Apple has been sort of a laggard in the tech space as far as the recent rally goes. It's largely been consolidating sideways since April 10. As of Friday, closed above the whole moving average. So it has my attention now from a shorter term momentum perspective. And the upper target is still quite a ways above us. So the upper dealer cluster zone is at 215 currently, and that's where we expect dealers might become sellers. The option volume today was almost entirely at these higher strikes, even up to 250. The 3D graph shows that 205 is the largest cluster expiring this Friday, and most of the 215 GEX that we see is at June 13 and June 20. This doesn't give us an exact date by which we would expect 215 to be reached. So with the 215 strike showing GEX clusters at various dates, it may take a couple of weeks or longer to reach that price. And if that's the case, it may imply that Apple doesn't reach that 215 before the broader indices reach a point where they see a pullback. So we'll just have to keep an eye on it. But on an individual basis, AAPL does have good upside to the 215 mark and possibly higher based on the GEX structure.
And if you want access to our gamma exposure dashboard, our algorithmic trading strategies, our option flow analytics, as well as our community Discord, you can head on over to geeksoffinance.com. You can sign up, become a member. Members do get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our portfolios. I'll put a link in the description below for you guys to check all of that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.